web live stream. Today I'm joined by Andrew Webley and Jamie Knowles, who is a new addition to the team. We'll be talking about that. We have a lot to cover. Actually, a lot has been going on in smarter web world. First we'll start with the official business of last week. We had our annual meeting in Bristol, England, which was my first time going to Bristol, and very much enjoyed it. And I suppose we will cover to start, what happened during the annual meeting, what formal business was covered, who attended, how the event went. So, Andrew, if you want to talk a little bit about our annual meeting last week and give the recap for everybody.
Yeah, sure. Good afternoon or good morning, everyone, depending on where you are. So the AGM is really important. This is our third shareholder meeting that we've had since we've been a public company. They're really important because shareholders get a vote in the key decisions that need to be put towards them. And so we had quite a few resolutions that needed to be tabled. They were all voted for positively, a small percentage against most of them. I think maybe 3% at the worst, something along those lines. So that was great. Really, their formal business, the vast majority of them. So you have things like directors being re-elected, the ability for the company to issue shares, a share incentive scheme, which is a long-term plan that we've designed for the key people in the company, the cancellation of some deferred shares, which is an old legacy thing, which makes our capital structure clearer for future plans. And I think they were the key things. Away from the formal business, it's an opportunity for us to, speak to and meet shareholders, some of which we know, some of which we haven't met before. There was, maybe 20 people in attendance in addition to the team. And it was great. We could show them, our current thinking of the company. We could answer questions that people raised. And then we went out for some food afterwards. So it was good. It was, you were there, Jesse, and I think everyone liked meeting you. Jamie was on holiday, but he'll be at the next one. And yeah, it was very good, actually.
Yeah, it was quite cool. It was in Bristol, which is not where most shareholders live, and yet we had about 20 make the trek out to Bristol and stay the night in a hotel on their own dime. So very dedicated bunch, and many of them are probably watching this right now. So it was a cool sign of support for a smart web company at what has been a relative low for Bitcoin and enthusiasm about Bitcoin treasury companies. So, I think everybody there was very excited about the future. I also thought it was cool to see the mechanics of a public company really in action. I thought that Sean, the chairman of the board, did an excellent job of guiding the proceedings through the official business, and the company secretary, Michael, who I had not met before, was quite official and polished as well. So it was cool to see the governance arm in action, and I thought it was also very cool to see Concord, which was the meeting room right next door to the last Concorde jet to fly. It was pretty cool to take a walk through, and I think Andrew, I know that you have an affinity for Concorde as a Bristol project, Bristol and France, as you've pointed out in the past. But I every time we link Smarter Web to that, I'm struck by the relevant parallels there of innovation from the past and bold and ambitious projects that Bristol seems to do. And here we are trying to do that for the digital capital and digital credit future.
Yeah, there's one thing that is also very close to my heart. So if I look back at my career and I look at the role that I had at Hargreaves Lansdown, which is by far the biggest retail investment platform in the UK, that's a Bristol company, and I believe that companies that adopt digital capital will be the most valuable companies in the world. Digital capital, digital credit, digital money, so on and so forth. And if we're successful in what we're trying to do, then that's quite cool. Hargreaves Lansdown did a fantastic thing for retail investors. They made it accessible. They made it relatively affordable. Apart from their outage on Friday, they made it a very, very good service on the whole, over many, many years. And so if we're, right in our thesis that this is the future of finance globally, for us to be part of that, and another thing coming out of Bristol with, all of my colleagues, America, London, etc., then that's pretty cool.
Absolutely. So I guess that sort of covers the recap of our AGM last week, and again, of course, we'll be doing that every year going forward. But good to have some of that official business taken care of. I guess one final note for shareholders is some of that stuff matters a lot for us being able to execute on our strategy as a Bitcoin treasury company, and so it's key enablers for things that we want to do or want to have the optionality to do. So it all helps. Other sort of official business over the last week, there have been some staff changes. Andrew, I don't know if you want to say a few words on that, and then we can welcome Jamie here and talk about Jamie and his role.
Yeah, sure. So a couple of weeks ago, we put some job vacancies on our website. We've got a new section there. Everyone that was paying attention at the time would see that we advertised a financial controller and a project coordinator role. Only one of those roles is now on there, the project coordinator. We still haven't found the right person, so we'll keep looking until we do. And then on Friday, we announced that Albert, our CFO, had resigned. I thank him for everything that he's contributed to the company over the last 6 months. And then on Monday, we announced Jamie, who many of our shareholders will know. He's been a shareholder since the start. Had joined us in a full-time capacity as the head of capital markets. And then in a few weeks' time, once our new financial controller comes on board, we'll communicate with everyone who that is as well. So yeah, lots of changes in quite a short space of time. I would like to say that someone who doesn't get so much credit but is a massive part of the team, again, who's been part of the team since before I was actually involved in the shell, which then became Smarter Web Company, is Mario. So Mario is essential behind the scenes. Occasionally we give him a little shout out, but he definitely doesn't get the credit that he deserves. And the great thing about having Mario, who looks after our acquisitions, is that he was our original CFO, and so he can hold those reins in the short term as well.
Absolutely, yes. Some exciting changes, and Jamie most of all here. So Jamie, I figure it's probably in order for you to give a little bit of background about yourself, and also your Bitcoin bona fides and your history with Smarter Web. I think everybody would be interested to know.
No, thanks, Jesse, and appreciate that, Andrew, as well. So, like you said, maybe I'll spend a few minutes just talking about who I am, my previous experience, and what my role is going to be at Smarter Web. So, this will cover probably like 3 to 5 minutes. But the first thing I want to do is actually just say thank you. I received so many nice messages yesterday, both on X and LinkedIn, and personally, just wishing me all the best. And, most importantly, I want to say thank you to Andrew, for his trust in me and providing me with this role. And the one thing that's really stood out to me is how much Smarter Web means to so many people. And like you said, Jesse, you got a small glimpse of that at the AGM with people making the effort to come and support the company. But it's clear to me, how much it means and why the UK needs a company that's built on digital capital, that's listed. And it's the opportunity set is huge for us. And, certainly that was one of the things that attracted me to the role, which I'll go into. But first of all, for those that don't know, my handle is @the Desert Ape. So for those that haven't seen me before, that's my official X handle. And if I'm not connected to you, please send me a message. Very happy to connect and listen to thoughts and share ideas. From an experienced background, so like you said, first of all, my role is as head of capital markets. So maybe I'll just explain a little bit more about what that is, and then I'll explain my experience. So my role effectively has two responsibilities. The first is on the investor relations side, which is managing our relationships with both existing and new investors, and making sure that they understand the Smarter Web equity story and what our strategy is, and listening to their feedback. The second part is the capital markets angle, which is really about developing and managing relationships with all the key stakeholders that go into helping us raise capital. So that's the banks, the brokers, the lawyers, the financial advisors, etc. Now, those two roles naturally overlap in practice. Obviously, the investors are those that provide the capital for us to grow, and the banks, the brokers, and the external advisors are those that help facilitate the transactions. So my role is really a relationship one. I'm based in central London, and really I'm going to be the boots on the ground here, with Andrew in Bristol pulling the strings. Jesse, obviously, in the US as well, providing a lot of the strategic thinking, and I'm going to be here in London helping to execute on the ground. So, from a career experience perspective, I've been working in financial markets for close to 20 years now, and that's been across both traditional and digital assets. So, I started my career in 2006 at JP Morgan, and I've always, and post that, I was at Credit Suisse and Bank of America, where in total I worked for about 16 years as an equity sales trader. For those that don't know, an equity sales trader is somebody that sits on a trading floor and speaks with institutional investors that can be long funds, asset managers, hedge funds, and helps them with three things: to provide them with execution of orders, normally for single stocks or derivatives, provides them with market intelligence, and thirdly, provides them with access to ECM transactions that the bank may be running. And in 2022, well, I should really take a step back and say in about 2018, I started getting full time into Bitcoin. And that was really when I sort of got the Bitcoin bug. And in 2022, I decided to make the transition full time from working at Bank of America to going to work in digital assets. So I left to join a company called Galaxy Digital, which is now called Galaxy and is listed on the NASDAQ, to help them expand their European sales and sales trading presence. And then I was there for about 2 years before leaving with another ex-Galaxy colleague to set up our own digital assets consultancy, which I was running for around 2.5 years as our chief commercial officer. And during that time, in April of last year, I naturally got into the Smarter Web IPO. And that had really been a function of the fact that I've been following the Bitcoin treasury sector for some time. I was a strategy holder. I saw the fact that Andrew was doing the IPO, and via AJ Bell, I got involved. And then subsequently post that, I was getting more active in the community on one side, but also just having, consistent conversations with Andrew as a shareholder. And naturally, over time, our relationship grew. And, at the back end of last year, he needed some help for things done in London, which I was obviously very happy to work alongside him. And naturally, our relationship just continued to grow. I started working closer with Jesse, with the rest of the team. And when it came to sort of the end of our contracting period, Andrew asked me whether I'd have any interest in going full time. And naturally, it was a very difficult decision because, as I alluded to, I'd spent 2.5 years building a business with another colleague of mine. But he, I have to say, was particularly understanding. He knew how much Smarter Web meant to me, and he also knew, as well as I did, about the opportunity set ahead. So it was a very natural and easy decision for me in the end. And I want to thank, Andrew, yourself, and the rest of the team for making the transition very smooth for me. But most importantly, I'm just really excited about, starting. Yesterday was day one, and just getting my feet under the table and trying to work as hard as possible to move forward all the initiatives that we have to, continue to make the company great.
Yeah, great summary. And I'd add I'll also add that, Andrew and I have had the chance to do a week of meetings in London with Jamie, and everyone seems to know Jamie already from 16 years working in the city in TradFi. So I was amazed that we would literally run into people in coffee shops and then even at the pub later, Jamie, who knew you, and we're excited to see you and talk to you. So I think that's
Thank you, Jesse.
a great sign of not only do we have the right guy who sees the opportunity for Smarter Web and has since day one as a shareholder, but brings exactly the kind of Rolodex and expertise in navigating the city that we need at this point in time.
Thank you, Jesse. That's very kind of you, and I appreciate that.
It's really important because we talk a lot about why the London Stock Exchange is like a structural moment in the company, or now the indices and so on. But the team is massively important, and Jesse and I have worked together for almost 12 months now. And Jamie's like the missing bit of the jigsaw puzzle, we think, that we didn't have. Somebody who loves Bitcoin treasury companies, Smarter Web, somebody that is massively experienced in traditional capital markets and digital capital markets. It's lovely hearing Jamie say that he's grateful for the opportunity, but I think as shareholders and the existing team, I think we should say that we're grateful that Jamie wanted to be part of the team, and we're very much looking forward to the coming years, trying to execute on this plan. And I think, like Jesse says, those meetings that we did together, Jesse and I, we do okay in the meetings by ourselves, but they were better with Jamie, 100%.
Thank you. You guys are too modest. I think with the three of us there, I think we do a really good job of getting all the right points across and covering all the right angles, with each of us specializing in certain specific areas. I think we make a really good team in terms of the presentations.
Agreed. Very much agreed. So yes, we're thrilled about having Jamie on board and hitting the pavement in the city of London over the years to come. So
you know what's funny, Jesse? Just a small bit. I suppose you could say this is pretty sad, actually, but I've been living and working in London for 20 years, and I've literally only ever worked or lived in the square mile, which is obviously that area. I've never lived outside of it. I've never worked effectively outside of it, apart from the time I was working in Canary Wharf at CS. So I'm pretty very much bang in London, in the city. And most importantly, it's worth saying that if anyone's ever down and wants to meet for a coffee or just get in contact, please let me know. I'm very happy to come meet on short notice and just hear ideas and feedback and listen to what all shareholders are saying. All views are equally important, and it's important for people to recognize and remember that.
Absolutely, great point, and many conversations to come. I figure before we get too far into this live stream, we should probably recap the other important events for the company over the last couple of weeks. First being our inclusion in the FTSE All Share Index, and so the mechanics that have happened there, and just a general recap of that. Andrew, if you want to start there, maybe if you could tee up what has happened, what index inclusion means in the UK for those who are less familiar.
Yeah, sure. So index inclusion is really important for any Bitcoin treasury company. It gives you access to passive capital. So the meetings that we were just talking about, where we go and speak to active fund managers, people that make a decision to invest in something because they like the potential of the company, the sector, whatever. Passive money is where people don't make a decision. By being in an index, you get a weighting effectively, and index funds follow those indexes, and they have to invest in you. We don't know what the impact of it will be yet. At the close on Friday and the start of Monday, that's when it happened. So if you look on the London Stock Exchange website, on the HL website, things like that, you'll see that you'll see that we're in the FTSE All Share, the FTSE Small Cap. So
are you guys getting some cracking coming through the stream?
I think it might only be you, Jamie. I think.
So I didn't mean to cut you guys off there. Apologies.
No, all good. Continue, Andrew. Yeah, I can hear Andrew just fine, so it might just be on your end, Jamie.
No worries. Yeah, so with the indexes, it means that when you're in the index and you get an allocation, so we don't know what the benefit will be, but I'd be quite surprised if there isn't a benefit, you know. If we look at the transaction that happened on Friday night, that was about £1 million. I think it's about 4.5 million shares, something along those lines. Might have been more in money terms, actually. So a significant amount, and effectively those shares go off the market, you know, until probably next quarter. And then as we grow, which will come through Bitcoin going up, issuing more equity, so on and so forth, i.e. the company becoming more valuable, then hopefully we can progress through the other indexes. You know, as I said, you know, like some people have become very excited, and I think it's a significant step forward. You know, we're the only Bitcoin treasury company in the UK to have any index inclusion, because, you know, there aren't any indexes on Aquis, which is another reason why we wanted to move onto the London Stock Exchange. But you know, with reasonable confidence, I believe it will be a positive thing. And of course, you get the side benefit of, you know, anyone that owns one of these active funds, which is significant, then they have a very small exposure to smarter web, and we've got a Bitcoin balance sheet. So, you know, I'm getting one step closer to orange pilling the whole of the UK.
Yes, agreed. It is fun to think about how sort of back of the envelope math. It's probably something like 10 pence of everybody's pension in the UK is now smarter web, which is kind of a fun thought. You know, just kind of order of magnitude scale of what has now happened. And of course, we hope and expect that will grow over time, and we will become a larger and larger part of UK portfolios just by virtue of inclusion in the index. And part of that too, you know, an anecdote I really like is that since the start of Metaplanet's strategy in Japan, they alone have represented 9% of total Tokyo Stock Exchange returns. And so what that effectively means is if you didn't have exposure to Metaplanet over the last couple of years, you underperformed. If you're, you know, a fund manager in Tokyo and your benchmark was, you know, the Tokyo Stock Exchange, if you didn't have exposure to Metaplanet, then you massively underperformed your benchmark. Hopefully, that's a similar sort of story to how things play out for Smarter Web now that we are in the index in the UK. And of course, this is just the first index. There are two larger indexes that have much more AUM associated with them that we hope to crack into in time. So, but a big milestone for the company and a first for Bitcoin treasury companies in the UK. So, you know, an event we hope to build on. And also, just to cover, you know, there have been plenty of questions about what are the exact mechanics of how this works and when the timing is. And the real answer is we don't really have a great answer. We've been asking around, and it seems somewhat opaque. What we do know is that there's a bit of a cottage industry of hedge funds that focus on these events that built a position in advance with the expectation of selling that position to the auction, you know, for whatever small profit they, you know, have modeled in based on their experience doing this kind of event-driven trading. And that probably has happened already. But then on top of that, there's some amount of volume that occurs over the next month or so. And again, very rough sort of vague descriptions that we've received. And that's really all we can pass on to investors in terms of what we know. But suffice to say that it all adds up and it matters, and it's not zero. It's not zero shares that are being bought. It's something like 10 million, or all in maybe 15 million. Jamie, you appear to be on mute of some fashion. So while Jamie sorts out his sound, the next topic that I figured we should cover too is the discounted warrant buyback that we completed last week. It feels like a long time ago, and delivered about 0.75% of Bitcoin yield from that transaction alone, which is small but meaningful. Yeah, so Andrew, if you want to describe a little bit about what happened there, how that timeline played out.
Sorry, Jesse, can you hear me?
Yes, can hear you now, Jamie.
Good. Well,
did you have anything you wanted to add on the index front?
Sorry for the tech issues there, guys. Not a
All
great
good.
start to
Hey,
the
it's
first
only day
one.
2 for you, huh?
Yeah, exactly. I'm gonna have to get improve on this. So yeah, on the index inclusion thing, it's just maybe worth adding a little bit of color from my own experience. So what the main question that people were asking, and where probably the main source of confusion is that, as we stated, there was a large amount of shares that needed to be bought from various index trackers. And the question people have is, okay, so where does all that supply actually come from? So prior to the index inclusion, we'd estimated that there probably was around sort of 12 to 13 million shares that needed to be bought. And so people were naturally asking, right, so who's actually going to be selling those shares? And the main sellers of the shares, well, the selling of the shares comes from the market. And what that means is there's really 4 different buckets of investors that effectively look to participate in these types of auctions. Those are active managers. They're the index funds that Jesse mentioned. They are retail holders as well. And there are some of these, what we would call sort of like special situation type of funds as well. And they sort of all amalgamate together to make the majority of the supply. But really where it comes from, like you said, is that there are a variety of different hedge funds whose job it is to effectively trade around these strategies. And so they will start to accumulate positions in stocks that need to be added prior to any index inclusion. And they'll look to sell shares that need to be shares for stocks that will be deleted from various indexes as well. And when they start those is really TBD. And it depends on what the market is doing. It depends on what the individual stock is doing. It depends on how big the index inclusion or deletion is, etc. I mean, a really good example is, let's just say hypothetically there was an oil company that was going to be excluded, and there was a lot of news going around on the oil price and geopolitics. Somebody may take a specific view on that stock based on that news, depending on when they would like to start that order. So that's just like a small example. But that's where the majority of the flow comes from. And there are a lot of desks across the hedge fund industry that do this globally. It's a really, really big business. But the most important thing to remember is that for the index fund itself, they don't care what the stock does within the closing auction, because they are tied to whatever the closing price is. That is their reference price. And they need to match that exactly to make sure that they have no index tracking slippage. And so that's the most important reference point for them. And that's naturally why you'll look to see the stock tend to do the opposite to what it has done going into the event post whenever the reweight takes place. So if a stock is an addition, naturally the thought process is that it will move up into the auction or into the event, and the subsequent few days afterwards, it will look to sort of recalibrate and sell off, and vice versa on the deletions as well.
That's great color and actually sort of new information for me in terms of the expected mechanics of how you'd expect it to trade, which lines up with what we've seen in the the week around the index inclusion for Smarter Web. So yeah, it's a new part of. Yeah, go ahead.
Yeah, I was going to say, did you guys mention whilst I was sorting the tech about how one of the most exciting things for me personally is now being part of the FTSE UK series is that it allows us a lot of exposure by being able to be a contributor to things like top movers. Did we talk about that?
We didn't. That didn't come up. So Jamie,
Okay.
if you want to recap that.
Yeah. So what was, maybe this is actually a little bit of interesting color, but recently when I was speaking to Tyler Evans, who is on our board, he was saying to me that prior to, one of the most interesting things about MetaPlanet was that once they became part of the index, it was consistently appearing in the top gainers or top losers, just naturally because of its volatility. And that was really what helped people in Japan to start to get some understanding of who they were, because people were seeing its name consistently coming up and were like, well, who are these guys? What are they doing? I keep seeing their name pop up at the top or towards the bottom of the leaderboard. And just given our volatility profile, I think there's a strong chance that that's what's going to happen with us. And I know there's been a little bit of community work that's gone into just demonstrating that prior to us getting into the FTSE UK series. But I think that's what's really exciting, is that over time, once Bitcoin vol starts to pick up again and Smarter Web starts to reflect that, we're going to be at the top movers and top losers consistently just because of the vol, and that will just not naturally bring in more awareness and more attention, and from there, hopefully more liquidity as well.
Yes, absolutely. A cool feature of volatility. So we will be more and more visible. So Andrew, if we want to go back to the discounted warrant buyback transaction, just a quick recap of that, so that everyone is aware of what happened there and how it benefited shareholders.
Yeah, so there's not that many mistakes that I've made as a public company CEO. And I don't think the warrants were a mistake, because I don't think we would have raised the money to become a public company without offering those warrants. But there's certainly something that there is a perception, which I'm going to give an interesting angle about in a minute, actually, that they're a bad thing. So taking the view that they're a bad thing, what we wanted to do, and we had this in mind for some time, but it's about choosing the right moment to execute it. We offered to buy them back from anyone that wanted to sell them at a bit of a discount. Two things came out of that. One was, a lot of people said, we think Bitcoin's cheap, we think your stock's cheap, etc., which I was expecting from some of them, and from some of them I didn't know what the response would be. And then the other thing that came out of it is a small number of people, which totaled 3 million warrants, 3 million shares, said yes, they would like to take us up on that offer. So we did that. Those warrants are cancelled now. The effect of that is that it reduced our fully diluted shares by approximately 0.75%, and therefore it increased our BTC yield for the quarter to date. So it was a positive transaction in that regard. It basically means more sats per share. The thing that everyone, I think, is overlooking from these warrants, because everyone's got to understand that our Bitcoin Treasury Analytics works on fully diluted numbers. So all of those warrants are in the Bitcoin yield, the sats per share, etc. And what it means is, from the end of April, that will be a modest amount of capital that will come into the company when the warrant holders choose to exercise those warrants. And I believe that a lot of those warrant holders will exercise them to hold the shares, because there's certain tax advantages, particularly in America, of exercising the warrant, holding the share for a year plus, so on. So yeah, I think everyone's forgotten the fact that the cash will come in. We can deploy that cash, predominantly into Bitcoin. And because that won't increase the number of shares in issue effectively, because we use the fully diluted numbers when we look at it, that will be a modest amount of Bitcoin per share added, which will mean a positive Bitcoin yield in theory. as opposed to when we raise capital, say through a placing or the ATM, because we raise capital, but we increase the number of shares. Those shares from the warrants are already in there. So that's one small little angle that I thought was worth mentioning when we talk about the warrant overhang situation. And also from the warrant situation, because we've offered liquidity to those that perhaps wanted it quickly, perhaps that will soften the blow. So, we'll stay nimble, and should an opportunity to exist in the future present itself, then we'll see what we do. But it's another thing that we've done to try and in a fairly tough market to improve the
Yeah, and to underline a couple of things you said there, we thought we would get more uptake from warrant holders, but and we talked to most of them, and the overwhelming response was no, I'm bullish. I think this is undervalued right now, and I plan on holding. And for that reason, we had a smaller percentage of the we've sort of figured, we ballparked there's about 30 million warrants that were in play and that might be interested in something like this, and we got about 10% of those. We thought that would be a little bit higher, but I think it's a testament to actually these warrant holders are, it looks like, and we'll see what actually happens, but it looks like they are bullish at this point in time and think that Smarter Web is undervalued, especially given that we're below 1x MNAV. It's also worth pointing out that effectively that transaction, because we offered a discounted price point to the share price at the time, and we were already trading under 1x MNAV, was effectively a 0.6 MNAV transaction where we were canceling shares at that price. So that the difference between that and 1x MNAV translates into Bitcoin yield for existing shareholders. So that's how those mechanics worked. It's something that we now have the authority to do as a result of the general meeting in December, and it's something we can do for shares or for warrants into the future if opportunities present themselves again. So worth repeating to the community that this is one of those tools in the toolkit that if we are below 1x MNAV, it is still possible to deliver an increase in Bitcoin per share through transactions like this. Okay, cool. So those are kind of the things that have happened in the last couple of weeks, and I figured it'd also be worth sort of summarizing the quarter here. That a lot has happened over the course of Q1 for the Smarter Web company. At the start of Q1, we were not able to talk about our intention to be on the London Stock Exchange. Well, we talked about our intention to, at some point in the ambiguous future, do that. But that was happening. It was in motion. The start of this quarter, we were on the Aquis Exchange. And at the end of this quarter, we are now on London Stock Exchange. We are now included in the FTSE All-Share Index. We've added a handful of Bitcoin to our balance sheet through running the ATM at opportune moments when our MNAV was high enough for it to be accretive, and also doing discounted warrant transactions to increase Bitcoin per share. So despite the fact that we spent a good bit of money for the uplisting process and completed an acquisition of Squarebird to greatly increase our operating profits for the operating business, we are just about level in terms of our Bitcoin yield for the quarter. And that's because those costs were offset by accretive transactions that we were able to do through the ATM and through the discounted warrant buyback. And then we've conducted our annual meeting and completed the formal business there. Some staff changes, including Jamie and a new controller coming on board. So an awful lot has happened in Q1 for the Smarter Web company. Any other things that I missed there that you guys want to add on?
think you got the key points. It's been a tough market. If you look at Bitcoin treasury companies, Q1's been a bit challenging. We've tried to do our best and set things up for the future, regardless of the Bitcoin price. I'm very much looking forward to Q2. I think that's going to be a very good one, hopefully, without giving any clues away. But yeah, Q1 we've done okay, haven't we? The LSE listing's fantastic, obviously. 10xing your revenue plus. That's got to be a good thing. Staff change is great. Index inclusion, good. Yeah.
I think for me, Andrew and Jesse as well, like, one of the things that now that I'm sort of full time, I've sort of can recognize is like how much you guys are doing behind the scenes to advance different initiatives. And really this quarter, what it's been about is putting all the plumbing, for lack of a better word, in place so that when the market does inflect and sentiment does return, which we think it will, then we are in the best possible place. So these are what might seem like boring administrative tasks, but they're really crucial to making sure that things run smoothly. So that are things like you mentioned, like changing our articles to allow for the buybacks, signing lending facilities with our custodians, etc., putting together our new investor deck, our presentation, so that we can go and speak with banks, brokers, institutions, etc. All these different things that when sentiment does come back, we're going to be the best prepared. But a lot of the stuff also comes back to, Andrew said it as well, is about trying to clean up our capital structure. That's something that he mentioned in his weekly, and that's really one of the things that we're trying to do, is trying to make sure that we have a capital structure that's very simple for people to understand. And so a lot of the work that we've done this quarter has taken a step to trying to address that.
Great point.
It's always it's hard, for the shareholders at times, though, because we believe in transparency, and we've always tried to communicate everything as much as we can. But you make the point, Jamie, that now you're a permanent insider, you see everything that's going on, and it is a shame that we can't say certain things or certain things that we're working on to the shareholders. But that's why we must work harder to execute these things so they trust us more. And then hopefully they don't worry so much about the things that we're working on, because they can see the other things that we've delivered, and over the medium term, they see that the strategy's right.
Yes.
So I would ask everyone to, trust us. We do have right now we've after 12 months of being this public company, we've got a plan that's way better than I even thought it was 3 months ago. But you're just going to have to sort of trust us. We want to talk about certain things as much as you want us to talk about things, and and we will be able to talk about things soon.
It's a good shout out. Yeah, and I'd recap that. There's an old, I guess, truism in the Bitcoin industry of you build in a bear market, and you don't have time to build in a bull market. You're too busy picking up the phone, and it all happens so quickly. So any growth, and you reap what you sow during the bull market, and it's all about getting ready and making sure that you're in the right positioning, have the right infrastructure in place to make the most of a bull market. And that's very much what we're focused on, and we're little by little getting in a better position to be MicroStrategy for the UK, which is really our goal, and to be that preferred name that's synonymous with amplified Bitcoin for UK capital markets, for UK capital. So we're little by little, we are getting there, and next quarter will be another quarter of building that future. So excited about that. Perhaps it's a good place for us to wrap it up. So Andrew or Jamie, I guess those were my last thoughts. Andrew or Jamie, if you guys have any sort of final words or topics you want to make sure that we touch, and then we can wrap it there.
Nothing from me. Just want to say once again, really grateful to be part of the team full time now, and looking forward to speaking with all shareholders. And like I said at the start, my DMs are always open for anyone that wants to communicate, and where possible, I'll try to give as much color, and looking forward to cracking on with all of you.
Yeah, for me, I just want to say thank you to everyone, and say that, I'm more excited than I've been at any point in the history of Smarter Web right now. And over the coming days, weeks, and months, then, I hope that we can take this company to the next level, onto the FTSE 250 thereafter. And I think we've got a very exciting future. Obviously, we are incredibly tied into the price of Bitcoin, being the largest holder of Bitcoin in the UK by some margin. I believe at some point, hopefully fairly soon, Bitcoin will start to show strength. It's showing, in my opinion, relative strength on a global stage at the moment in very difficult times. But clearly, when Bitcoin comes back to life with everything that we've built, I think it's going to be incredible.
I agree. Yeah, we are downstream of Bitcoin sentiment, and we're getting ready for the next wave. Yeah, this has been a great. We covered a lot, but a lot has happened in Q1. We look forward to a lot happening in Q2. We haven't even mentioned the Bitcoin Unconference, which will be coming up in May, end of May in Bristol. Tickets are still available for that if people want to check that out on our website. It's going to be the second installment of the Bitcoin Unconference in-person series. The first one being in New York City. The second one, quite fittingly, in my opinion, in the #2 financial center of the world, will be in England. Granted, in Bristol, which is not necessarily the historical #2 financial center that London is, but
it's the new one.
The new one. That's right.
Where digital capital is taking over the world.
That's right.
So yeah.
So yeah, the great session here, and we will leave it there, and we will do another one of these in a few weeks. So let me know any topics or feedback that you all may have, and I hope everybody has a great rest of their week.